the big news story of the week is in Spotify. So they started the week cutting about 17% of his workforce. I think it was about 1,500 people. So
Yeah.
not a pleasant Christmas for that cohort anyways. Is there anything noteworthy about the layoff, Emmet?
Well, for a start, I suspect there's about 1,500 fewer people with a free Spotify subscription. But
Yeah.
yeah, Daniel Ek, this founding CEO, wrote in a memo posted online and sent to his employees on Monday. And he said, I realize that for many, a reduction of this size will feel surprisingly large given the recent positive earnings report and our performance. So really, there was, I suppose, a self-awareness that this isn't a good look.
Mm.
And it's the
I read
third
I read
time.
I read the
Yeah.
I read the document as well. Very blunt, will we say? Cutthroat
Very
seems
blunt.
harsh, but just very like this is what we need to do for the business. And
Yeah,
sorry,
I agree. I read it too, and I had, and I don't want to be unfair to an entire race, but to say I had a kind of Scandinavian bluntness, if
directness.
you like,
Yeah, yeah.
directness. Yeah, but it's actually the third time that Spotify's cut jobs this year, and it reduced its workforce by 6% in January, and then a following 2% there in summer in June. And as a result of the announcement he made this week, as you can imagine, there was quite a few cynical tweets because Spotify did their what's it called, the wrap up, is it the annual wrap
Spotify
up?
Wrapped. Yeah, yeah, yeah.
Yeah, wrapped, and somebody kind of repurposed that infographic to show that you cut 25% of your workforce this year,
Ugh.
and the employees most affected, like 2,300, and the department hit the hardest was marketing, and it did it just like the Spotify wrap, which I thought was almost inevitable, but it was unfortunately well done. But if we look at the bigger picture, like the world, the number of tech layoffs was really front loaded in 2023, more in January, I suspect, than the entire second half of this year. It seems like in January, and I have a chart here in front of me, there was 108,000 and nearly 109,000 tech layoffs, and that came from Amazon, Google, Microsoft, Salesforce, IBM, all the big
Mm.
names.
All
And
all
February had,
companies doing quite well as well.
oh, entirely. You would not encounter a name that you would say, yeah, that's frail. That business really is fighting to breathe. So yeah, so January, February, March, between those 3 months had about 250,000 layoffs. Now, when you look at the last few months, now December has only started, so we're at 1,900, November 1,600, October 31,000, September 14,000. Like you basically see that it was Q1 where most of the damage for the year was done. But look,
Yeah.
bringing it back to Spotify, the business, like all those other tech companies that grew in size during the pandemic, and its headcount doubled over the last 3 years to 8,000 workers. That's a big workforce. You know, when you look at Spotify, I think you could be forgiven for thinking what they've done is elegant. And with elegance comes a degree of simplicity. And with simplicity comes, well, not 8,000 people. And I think the main thing that matters at the moment out there in the tech world is profitability ahead of growth. We see that all the time. We see it in MyWallSt. I mean, MyWallSt for the first few years, uh, our story was grow, 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 earn trust, get the biggest audience possible. But like that's all fine as long as somebody's handing you a check. But what really matters now for every business is profitability ahead of growth. So despite its efforts to reduce costs, X said that in that note that we both read, that Spotify is still spending too much money and that interest rate increases have made it more expensive to borrow. And here's another quote from that missive he sent. He says, the Spotify of tomorrow must be defined by being relentlessly resourceful in the ways we operate, innovate, and tackle problems. Being lean is not an option, but a necessity. And actually, as it happens, the shares popped
Yeah.
8% on after the announcement. Did you see that?
I think it's indicative of wider investor sentiment, especially with the company
Mm,
like Spotify, and we'll get into the why the operating expenses are so important there, is that I think basically all of Wall Street knows that tech got very bloated
yeah,
and they
yeah.
need to see it cutting back and they need to see it focusing on the bottom line. Like Spotify is a huge business and it's just turning over 30 million operating profit in this quarter. You know, it was
Yeah,
losing 200 million a year last year. So
that's a
it,
fact.
it's really shifting the priorities from what you said, from growth to the bottom line. And I think it's very important that most tech investors realize that the shift has happened. And while some high quality business might get away with it, uh, the focus isn't as much on grow at all costs or even
Yeah.
growth at all, really. So yeah, for sure.
I heard a rumor, I would say about 2 years ago, founded on one piece of data or one anecdote. And as I said before, an anecdote doesn't make data, but that the big tech companies, Microsoft and the likes, were recruiting talent to stop the other guys get it. I mean, it
Mm,
was like vanity recruitment. So, and I heard it on a pretty solid, from a pretty solid source, someone who said they were recruited to stop them being
yeah,
recruited by someone else. So, when you're in that realm, you realize something has malfunctioned. But look, Spotify shares are up about 150% this year. They're still down from their high. So that's the layoffs. But you've been looking into it. What are your thoughts of it as an investment, Mike?
yeah. So I thought this was worth diving into when we were talking about Spotify because I think a lot of people are going to be listening to Spotify for this podcast. You know what I mean?
Mm,
And you mentioned
mm,
it there, stocks up close to 150% year to date. And it fell as much as 80% between February 2021 to the end of 2022. So it still hasn't fully recovered. I think it's about 40% from all time highs set there at the start of 2021. So this whipsaw in the share price isn't surprising. And then to see the company or the stock perform so well while it's going through
mm.
three different sets of layoffs, you know, if you were in the company as an employee and you're seeing the stock go one way and the staff count go the other, you kind of question things. But I think
Yeah,
that's the perennial issue investors have with Spotify is its cost structure. It's what Daniel Ek mentioned in the document that went out to everyone about the layoffs. So
mm,
I thought it'd be interesting to go through the company and see what's changed, but more importantly, see what's the same. And the number one criticism of Spotify has always been that it can't control its costs. So its main expense is artist royalties, and these, of course, scale along with how many streams an artist gets.
mm.
Typically, with a software business, you'd have relatively fixed costs, and then scaling is where you make that high margin income because you've spent all your money on whatever else, cloud servers and all the tech involved and all the staff and everything else. But if you add one more customer, there's no real additional cost to that. Just setting them
Yeah,
up
yeah,
small bits.
totally. Yeah,
That's not the case with Spotify. It doesn't really
really.
act like a normal software business. So Spotify's gross margin is in the mid 20s and has been for a very long time. And even on top of this, so it's spending so much money on artist royalties. But on the other side of that, artists hate Spotify because they pay peanuts as well. So not only is it getting squeezed, but it's also doing some squeezing itself. So
Yeah.
it's not even like it can really cut into what it's already paying because it's already so low. So I remember we were talking about this recently, Emmet, with the Porter's Five Forces, and one of the issues was
Yeah.
the buying power of your customers. So Spotify is
Yeah.
in an awful spot here. So it's a distributor essentially buying content
Yes.
off record labels and distributing it to its users. So those record labels are incredibly powerful, which is why Spotify's margin performance has been so poor, especially well for a software company. Like I don't know,
Yeah.
it's a software company, but it kind of isn't either, especially its cost structure. So between the big three
Well,
record labels, Universal Music Group, Sony, and Warner, they control about 80% of the market. So if we're talking about
mm,
buying power, that's not the three customers you want to have at
no
all.
way. No. I mean, never until now did I look at Spotify as a two-sided marketplace. It just didn't occur to me. But you could almost argue that it's no different to Etsy. There's people knitting nice jumpers on one side and buyers on the other. But instead of jumpers, we're talking about, obviously podcasts and music. But it really is a double-sided marketplace with crushing powers on both sides. And that is, I suppose, a perspective that I'd never latched onto. I have a question for you. Are you a paying Spotify member or are you Apple Music? Which one do you use?
I'm paying Spotify, and I don't think I would change for a significant amount of money. I
That's
love it.
very
It's
interesting.
one of my most used apps.
Yeah. Now, the reason that's interesting to me is I always looked at Apple Music as a perfect substitute. Coming back to Porter, the fact that we have I thought right over there is the exact same thing, same tracks, the same podcasts, the same playlists, and so on. But it's very funny. Last night, my older son said to me, I'm on Apple Music and he's on Spotify, which is highly inefficient, by the way, for a household. But he said he would never swap. I was like, what are you talking about? It's the same thing. So it's not a perfect duopoly. They're actually, it seems that Spotify is really differentiated in the minds of its customers, such as yourself and such as my son. So what is it that
Yeah.
has it so sticky in your mind?
Yeah, well, it's an interesting conversation because we probably don't give Spotify enough credit. Like
Hmm.
Apple completely dominated the music market, iTunes and all the rest. And this little
Yeah.
Swedish startup came in and completely took share. And like its two biggest competitors now are Apple and Amazon. And if you throw YouTube in as well. So
Oh, yeah.
Apple, Amazon, and Google, like
Yeah.
the three biggest companies in the world, and Spotify is the one leading the market. So in
Wow.
that sense, I think it probably doesn't get enough credit as a business story in Spotify,
Mm,
probably because the situation it's in now, where it hasn't really kicked on from that. It's still stuck with kind of the same problems, and maybe that's why Apple didn't defend itself as much as it could have, because it saw that
mm,
it wasn't the most lucrative market. I'm not sure, but
yeah.
yeah, in terms of actual using Spotify, I think there's so much they do create curated playlists. They kind of tell you what to listen to next, which is the beautiful thing.
Yeah.
So like
Yeah.
using, yeah, I
Yeah.
remember I used to have Discover Weekly every Monday, and then out of the 30 songs, 15 would get added to my already new playlist or whatever else. So there is so much, and you can see as well that Spotify have been trying to remedy the gross margin issue around royalties for a long time. So they got into
Mm,
podcasts heavily. Now their execution on that strategy wasn't great, given Prince Harry and Meghan
yeah.
Markle 20 million quid to make one podcast or something like. But
Yeah.
they saw a route of saying, all right, well, we have music, but why not get all of audio? And they've pushed into audiobooks as well. I think they're trying to add audiobooks as part of just your general subscription, which is great.
Mm,
Um, but I don't see Spotify not being dominated by music at the same time. I think those are ancillaries.
yeah.
They're
Yeah.
not going to be the main product. But even Daniel Ek was really pushing into this AI generated music.
Yeah.
Not like Elvis singing Tom Jones songs, but like lo-fi study music beats
Oh,
that
yeah.
Spotify could produce itself. And so that
Yeah.
would be streams without royalties, which would be huge for the business. But in the end, it is going to be dominated by these huge record labels and big names